Welcome back to this special discussion on the Reserve Bank of India's monetary policy, which kept rates and stands unchanged but sprung a bit of a hawkish surprise. I have been speaking with Mr. Dinesh, Khara, B. Prasanna, Mridul Saggar and Samiran Chakraborty. Gentlemen, thank you for your patience. Samiran, now what is your sense about when liquidity might tighten? Does an expectation of a CRR cut now just goes out of the window for FY24?
I think at least for the lean season, it appears that there is going to be ample liquidity in the system. But what's interesting is that the RBI has quite consciously made a distinction between quantitative assessment of the liquidity surplus versus the assessment that the overnight call rates would have to stay close to the repo rate as a real indicator of how they're going to look at liquidity. What it means then is that there could be a coexistence of surplus liquidity along with repo rates remaining close to weighted average call rate. And there's no need to take out liquidity from the system in a hurry. But our sense is that for the time being the fine-tuning operations of BRRR and VRR, they would probably get primacy rather than durable liquidity measures of the variety of either CRR or OMO, at least in the lean season.
Prasanna, you agree? You think that we're going to have flush liquidity with Reserve Bank just ensuring with this fine-tuning that call rate stays at 6.5%? Will that be the shape of things? And therefore no CRR cut or OMO purchases of bonds?
Yeah, so before around a month ago, we were expecting a CRR cut to happen maybe towards the end of Q2 or somewhere in the middle, because our view on liquidity was that it will be deteriorating. But then 2 or 3 things which changed it are the RBI dividend, the FPI inflows, as well as the INR 2000 program. So I do agree with Samiran that the first half doesn't definitely look like a possibility right now. In fact, I mean, it's quite possible that the lean season of CIC, or rather the time period when CIC actually gets sucked out a lot is during the October to December period, and where we will have the elections also around about the same time. So it's quite possible that it is that period when, liquidity flows out. But till that time, RBI is going to be, I mean, we will have a surplus liquidity in the system. RBI will be very proactive in taking out liquidity using VRRs to ensure that, the interbank call rate does not fall much below the repo rate, which is the operating rate.
Range of the 10-year for 2023 for the remaining 6 months? Prasanna?
No, that's quite difficult, Latha, but I would say that there is a marginal uptick in the range. As of now, it looks like 695 to 710 kind of a range. There has been a lot of buying which has been happening from investors whenever yields tick up a little. And also there was a lot of hope that, at some point of time, there was a lot of confidence that at some point of time during the year, there will be a rate cut. To some extent, that's got postponed a little. So that is the reason why I said that the range shifts a little bit to the right. But at the same time, realize that Q2 is a very heavy supply quarter. So we have to see whether investors' demand especially in the longer part of the curve, sustain at that point of time.
Yeah, we have to look at the insurance companies, right? In any case, at the moment, it does look like it's going to be a long, stable period. I mean, we're not talking much in terms of even yields going up. It's about maybe 5-10 basis points. The range seems a fairly steady period. Mridul, to what extent does RBI look at the global factors? They keep saying ours is domestically oriented, but you had a Bank of Canada hiking rates unexpectedly. You had Reserve Bank of Australia doing it. The global situation is still like everyone expecting a recession, which is perhaps getting postponed. So, how do you parse this global backdrop in? RBI has to parse it in, right?
So, Latha, obviously, I think that was not the communication of the governor, that he doesn't look at the external situation. What he was trying to say was that it is predominantly the domestic condition. So let us understand that India is a coupled economy. It's not decoupled economy. And if global financial conditions change and there's rub-off on the Indian financial conditions, that will get factored into the monetary policy for obvious reasons. And today, the World Economic Prospects, which the World Bank released, kept the global growth forecast at an alarming 2.1%. So the slowdown message is very much there. Incremental data suggests that the slowdown is taking place at a slower pace than was earlier anticipated. So
Yes.
not panic. I think going lower down maybe in the second half. So today's policy was unusually sounded like business as usual, Governor was like very, very positive in his macro sentiments, but then he's an epitome of calm even at the times of crisis. So that's not surprising. What is important is to understand that if things change in the second half, the policy will nimble-footedly respond to that. And I think there is a downside on the growth, and there's a little downside on the inflation also vis-a-vis the projections.
Okay. I mean, this is interesting. Samiran, do you think we are in for a bit of a Goldilocks for the next 1 year? This recession is more in the minds of economists. It's not really happening. Do you think we are in for at least the next 12 months looking good?
We hope so. We had 3 turbulent years.
No, not a hope. As an economist, your projection.
If I go by my projections, I think it's a relatively decent period where the India growth is going to be better than global growth. And most of the macro stability parameters, and we're discussing only inflation out here, but we have to also look at external sector parameters to be much better this year compared to the last couple of years. And fiscal also consolidating in a nice way without too much of populism. So if we put all of this together, then I would say that sounds almost like Goldilocks.
Okay. Well, that's good to hear. But Chairman, Khara, we have quite a few developmental things which I wanted to ask you, at least 2 of them. This Prudential framework for resolution of stressed assets, especially on write-offs and compromise settlements. Is that good or bad? I mean, are they against technical write-offs, or is this just putting some rules in place?
I think it is positive because there would be different practices across different banks. So I think any kind of a guideline from the regulator would certainly be of a welcome measure. So I would rather say that it will probably even further ease out or maybe put in place a structure for resolution of such kind of assets also.
Okay, yeah. I mean, there at least when you speak to some of the public sector bankers in particular, there is a nagging worry that when you get into a compromise, who knows when the file gets opened. You think this actually emboldens and enables bankers?
Yes, certainly. So, in fact, we keep on doing the things, not that we wait for such kind of enablers. But yes, of course, it will further facilitate the environment.
Yeah, no, I agree that State Bank often is a class of its own in this. But clearly, these doubts get removed if that is the intent. And the other thing I wanted to ask you, this first-class guarantee, which a lot of fintechs indulge in, that got a bit of a support with the RBI saying that guidelines will come. How do you think it will play? Does it embolden them and they grab some business from you?
No, I think the most important part is that it will have an impact on the capital charge. If at all first-class guarantee is there, the capital charge will get reduced. So I think that to that extent also it is positive.
Okay, and finally, sir, you are best placed to say whether it looks like Goldilocks. Do you think there is healthy demand or is the demand petering out? As you said, from 16%, it's coming down to 14%. What's your assessment of the economy?
I think in general, if at all I would comment that the trend is quite positive and the real economy looks to be in a good shape. And when the real economy is in good shape, the bankers are all celebrating. So that is how it is.
And there was a bit of a reluctance to give a date for the expected credit loss rules. You were happy about that?
Yeah, I think my expectation was whatever our RBI governor has indicated, we were expecting similar kind of a trend, direction from RBI. So it has come out. In fact, it has addressed some of the anxieties which are there in the mind of many.
Okay. Fair enough. Yes, certainly. And even amongst investors. I agree with you, sir. Thank you very much, Mr. Khara. We are out of time, but I think we covered the policy comprehensively. Samiran, Chakraborty, Mridul Saggar, Prasanna and Mr. Khara, thank you very much for adding to our understanding of a monetary policy that was a slight twist in the tail. Thank you very much for watching this special show.